that you have. Are you noticing during these times that it's more of a buyer's market or a seller's market with these M&A? Are there companies that are distressed looking for people to acquire them, or they're going to fold? Or is it just companies on the other side saying, hey, I want to build during this bear market and let me find a good target? So where do you see which side?
Yeah, Rosanna, that's a very great point. We're seeing a bit of both. So one segment of the M&A market that we didn't talk about are SPAC, special purpose acquisition.
We're getting to that one next, but you can go into it.
Tech companies. So I'll save what I got on those. Aside from when a SPAC completes a merger, it basically changes into what we call a de-SPAC, or it converts into the private company that now turns public. Many unprofitable companies went public that way, and after the bear market effectively lost access to capital. So we have seen some distressed sales of de-SPACs that were their stocks down significantly, and I get the feeling that the board of directors didn't really have much choice in the matter. They kind of had to, we call it a mercy kill buyout. They basically had to throw in the towel and seek a buyer. Recently saw that with Berkshire Grey. They're getting acquired by SoftBank for well below $2 per share. I think it's around 58. We saw Volta get acquired by Shell for less than $1. And some other de-SPACs getting taken out just because they don't really have any other choices. And not only on the de-SPAC side, but other companies are definitely capitalizing. Large companies are capitalizing on some of the difficulties in technology or small cap space. Activision had well publicized issues, more so on the human resources side. They had some scandals there, so perhaps Microsoft was being a bit opportunistic there. Another one was iRobot, where Amazon is, attempting to acquire them, could have some antitrust issues on that one. So I see some of these very, jumbo cap or large cap entities swinging in opportunistically to buy probably very good assets, good brands on the cheap, because perhaps multiples have been smoked, or they've just lost access to capital and have to consider strategic alternatives. So we are definitely seeing opportunistic bids. Then we're seeing some private equity firms try to be opportunistic as well, and venture capital firms. I mentioned the SoftBank Berkshire Grey deal where they were already an investor, and we've seen some other private equity deals that way where, say the stock declines precipitously and they offer an attractive premium of 50, 60% on a stock that has declined dramatically. And that type of premium is fairly hard for a board of directors to say no to. But I'm sure behind the scenes, there's a lot of boards that even look at a high premium and the bid ask is still too wide, or they don't want to sell it at what could be the perceived lows.